let's talk about the jobs number that came out on Friday. We'll talk about what's going on with billionaire Barry. We've got to, of course, look at the week ahead. There's a lot of important things going on. Folks, I want to remind you, if you are in school, in the One Rental at a Time school right now, I give you permission to leave this live stream and go check out Ty. TYLG is doing a full breakdown of creative financing. It will, of course, be recorded so we can post it later. But yes, let's go show Ty some love. Get into that session. It starts at 7:30, which is right now. And Ty, if you watch this later, thank you for doing that. So folks, let me give you just a flavor of what you should be able to kind of uncover in your market and your buy box, right? Because again, remember, it doesn't matter. It doesn't matter what's going on nationally. It doesn't matter what's going on in another state. And frankly, it doesn't matter what's going on in a different city. The only thing that matters is what's going on in your buy box. So I want to give a shout out to Brian Lebo. Brian Lebo was, of course, the agent that helped Olivia and I get the house that I am in right now. He does a great monthly series on his channel. I believe it's called Lebo Group, talking about Vegas. And as you guys know, I am looking to buy an investment property in Vegas. But let me give you just an insight into his data, but more importantly, talk about what is really going on and why it is important to understand your area. So here we go. First and foremost, June sales, Las Vegas, 1,760. That is down 12% month on month. But for context, because again, this is not your home market, it is his, they typically do 2,500 to 3,000 transactions in June. So if you were looking at this, that is down something like 35%. Brian Lebo in his video went on to say it is the worst June on record. He has been tracking the Vegas market for the better part of 20 years, I believe. So again, when Brian speaks, certainly when the local agent speaks about your area and your buy box, you should pay attention. A lot of folks, again, do not understand price and transactions. They assume that if transactions are down, prices must fall. Folks, as I've said ad nauseum, the median home price is the transaction in the middle. So what's going on in Vegas? Median home price last month, or actually what would it be? June, so May was 470, June 475. Yes, folks, worst transactions on record for June and prices went up. I know that breaks the brain of Crash Bros, but they're idiots and they don't understand housing. But that is what could happen. Price is up 7% in Vegas. Supply, 3,920. That is up 8% month on month. However, Vegas is still sitting at 9 weeks supply. But now the value. Now what I want you to look at. So something that Brian Lebo has been doing for the last couple of years is he's been taking his market and dividing it into chunks. And this is what I want you to do. He in Vegas, right? Vegas median home price is about 500 for easy math, right? I just told you it was 475. For this conversation, let's round to 500. So what Brian does is he goes in and says, okay, from 250 to 500 grand, what is the active inventory and pendings? He calls it absorption. So right now, 250K to 500K, right? Median and below, 47% or half of the active inventory is pending. Now, if you go to the luxury market in Vegas, I always talk about is 2x. If the median is 500, what is going on 2x the median? So Brian calls that the luxury market, anywhere from 1 million to 1.5 million. The absorption in the luxury market, meaning pending, is 23%. Again, let's round to a quarter. So you have half the homes below the median pending, and the luxury market, or 2x the median, only a quarter. And yet prices are going up. if you look at just the logic, you say, hey, Michael, how can median go up when you have half the homes below the median pending and only a quarter of the luxury? Folks, that's where the supply comes in. There is no supply below 500 grand, right? And there is a growing active listings in the luxury market. This is the bifurcated market. This is why I have been telling you, if you happen to be shopping for a luxury product, write disrespectful offers. It is still hyper competitive, right below the median, at least in Vegas, and I'm willing to argue in most markets. So again, understand your buy box, understand what's going on, actives, pendings, price cuts, all of those things. So there you go. And Brian, thank you. You did a great job again in your June wrap up. Sorry, sniffles here. So let's talk about June payrolls. Again, this came out Friday morning. We don't typically record Fridays, but what happened? Estimate job creation was 200,000, came in at 206,000. Again, this is a dirty number. We can talk more about that in a minute, but let's talk about the unemployment rate. The unemployment rate went up unexpectedly from 4% to 4.1. If memory serves, and I might be off, but I think it went from 3.7 to 3.8, 3.8 to 3.9, 3.9 to 4, 4 to 4.1 every month, right? We are on a trend. Is that a trend that the job market is breaking? Maybe. The SOM rule is, again, the SOM rule takes the last 3-month average and says if we are a 50% or 50 basis points above that, we are in a recession. The SOM rule now has the highest reading of this cycle at 0.42. So we are getting very, very close. We are 0.42 away. And again, if it trips 0.5, the SOM rule kicks in. So we are getting really, really close. The 4.1% unemployment reading is the highest since October 2021. Folks, again, let's remind you that right now inside the One Rental at a Time school community, we are having a live Q&A on creative finance. Yesterday, Millennial Mike did a session on out-of-state investing. I'm hoping to load that later. And again, let me remind you about Thursday. Thursday, you're going to get Henry Washington and Lance Lambert. All right, folks, if you don't know who those gentlemen are, look them up. I'm particularly excited to get Lance Lambert in the school community because he has all of this data on historical markets. My hope is all of you join school and you say, hey, what about my market? What about Philadelphia or Miami or Cleveland or Memphis or Fresno? And you guys go in there and ask some questions. I'm going to love to see him go through his data and help highlight what is going on. So what about the jobs? Looks like government jobs, which is not what you want to see in a healthy housing market, or I'm sorry, in a healthy employment market. 70,000 job created, government. 49,000 healthcare, 27,000 construction. Looks like retail lost 9,000. So again, lots of stuff going on there. Mark Zandi is out saying, hey, Fed, cut rates. You've won. You've won the game. So something else we should talk about is the week ahead. Why? Well, first off, we should always understand what's coming. It could impact our market, our decisions, rates, stocks, all of that. But we'll go through it day by day, but just highlight right now, Thursday is the most important day of the week. Monday, we do get the summary of consumer credit, what is going on with credit. Tuesday, Wednesday, we get Powell testimony in front of the Senate. That can be market moving or it could be a nothing burger. My suspicion, God, I would not want Powell's job. Let me just tell you that right now. He's going to be grilled on both sides. There will be undoubtedly folks like Elizabeth Warren and the like saying, hey, cut rates. Elizabeth Warren, if you don't know, has written an open letter to Jerome Powell saying cut rates. So I expect some contention. I also expect some contention about rates in the election and things of that nature. So it could be an interesting session. Again, talk about a job I would not want. So that's Tuesday, Wednesday. Thursday, of course, we get weekly unemployment claims. Again, we have ticked up to 300 or 230,000. Let's see if that continues, if we take the next step up to the 240s. But Thursday's CPI, aka the first of 3 inflation readings. Of course, we get CPI, PPI, PCE, usually in that order. CPI headline, this is important. CPI headline last month was 3.3. It is forecast to be 3.1. So think about that. Just think about that for a minute. Jerome Powell and his cronies, full employment, stable prices. Unemployment rate has been ticking up, right? Inflation going from 3.3 to 3.1. Maybe it is coming down in the second half like they told us. So again, very interesting. Month-on-month numbers a little bit different. Last month was a 0. This month expected to be 0.1. Of course, core X food, X energy is actually expected to be flat, 3.4 to 3.4. So lots of stuff going on there. And of course, on Friday, we will get the second inflation reading, PPI, Producer Price Index. Think of that as kind of the wholesale inflation, what's in the system. And we will get consumer sentiment. So again, lots of stuff going on. How about Billionaire Barry? Well, folks, Billionaire Barry, he lost another one. Billionaire Barry and Starwood Capital lost the Artisan Building in El Segundo. Near as I can tell, I've done the math. This article was sent to me. Thank you, from The Real Deal. Looks like the building would have been sold for $125 million. The loan was about $85 million. It was foreclosed by the lender at $73 million. I'm rounding the numbers for simplicity. So near as I can tell, Starwood Capital lost, what would that be? $40 million because the equity is gone. This is what I keep telling you folks. In the commercial market, equity goes first. This is why I think when you take the total losses, it's going to be us, the citizens, the LPs that take it on the chin. And it looks like the bank or the lender took about a $12 million haircut. So again, the equity, $45 million, the lender, $12 million. It's not the housing crash. In the Great Recession, you would have seen the lender take almost 100% of that loss. So again, lots of stuff going on. I want to give a shout out to Millennial Mike. Millennial Mike posted on Instagram something from a gentleman named Chris Choi. I don't know who Chris Choi is, but I like this so much. I wanted to give credit where credit is due. Here we go. The goal shouldn't be to enjoy your 20s and retire at 65, right? That is the whole work 40 hours for 40 years to live on 40%. That's what I was raised to believe. So again, the goal shouldn't be enjoy your 20s and retire at 65. Instead, the goal is to use your 20s to retire in your 30s and 40s. Folks, that is the whole thing about my rationale about seasons. Use season 2, the grind mode, the build mode, the learn mode to get to season 3 as soon as possible. Get there in your 30s, get there in your 40s. Again, it does take time. It takes focus and discipline, all of that stuff. And then lastly, I want to give a shout out to Joseph Wang. Joseph Wang, FedGuy12 on Twitter or X. He caught this very subtle thing that I missed. Again, Joseph Wang, excellent job. What did he catch? If you go back to the dot plot or the Fed's forecast for unemployment, their forecast was for the unemployment rate to fall. They expected it to be below 4% at the end of 2024. And of course, we just learned last Friday that it ticked up to 4.1. So is the Fed wrong? Probably, but that's what happens with forecasts. Most of them are wrong. But also they might be on the wrong side. Again, remember my call for November, 50 basis point cut. Again, July is right around the corner. I don't think there's any chance of a July rate cut. I will agree with you that September is in focus, is possible. We'll see if they want to make a cut before the election. We will see if they want to go 1 month further. It is my belief that Jerome Powell's main mission is to crush the Fed put. And I believe if it's true, if I'm right, he won't cut in September, but he'll make it up in November with that 50 basis points cut. Folks, let's congratulate somebody. I should have done this, I believe, on Friday or Saturday. I forgot. My bad. James James, congratulations on getting your next deal. Your card will be out in the mail. So James, congratulations to you. And again, folks, do me a favor, join school. And I don't know if this is a treat or not, but in about 15 minutes, I will be going live on YouTube just to take some general questions. I actually want to highlight a post from Alex Hormozy to kind of start the session. But hey, we're going to go live in about 15 minutes on YouTube. Maybe we'll go for half an hour, 45 minutes. Come ask me questions, whatever you like. Take care. Bye.